Hi, and welcome to the economic summary for the 8th of February 2019, where I will be going through the current economic events for the past 24 hours. The European Commission published the winter 2019 economic forecast for the EU and the Eurozone. The Commission has considerably adjusted downward the future economic growth of the major European economies. It has forecast the GDP growth in the Eurozone to be 1.3% this year, from the last forecast of 1.9%. The forecast for next year's growth is 1.6%, unchanged from the last time. The downward adjustment is because of the weaker than anticipated economic growth in the third and fourth quarter of 2018. The Commission forecasts the real GDP growth in Italy to be 0.2% in 2019 and is expected to pick up to 0.8% in 2020. In the last forecast, the Commission was expecting a growth of about 1% each year. Even though the Italian government has implemented an expansionary fiscal policy, the uncertainty in financing conditions will overshadow the policy. Italy's new populist government and its proposed budget that will lead to a higher deficit, estimated to be 0.4% of GDP, will lead to a decline in the Italian economic activity, which in turn will lead to higher deficit than estimated 2.4%. Germany's industrial production November to December fell by 0.4%. The market was expecting a rise by 0.7%. This shows a slowed activity growth in the German economy at the end of 2018. The fall in the industrial production was mostly in the construction activity, which fell by 4% from the previous month. The activity in this sector is quite volatile due to weather conditions and the lack of labor force. The capital goods output rose by 0.9%. This sector gives a better picture of the underlying trend in the economy. The rise in capital goods output was due to a higher activity in the automotive industry, which rose by 7%. The automotive industry was having a slow activity since September 2018 due to the new emission regulations. Now it seems like the car producers have adapted to the new regulations. The Bank of England is keeping the interest rate unchanged at 0.75%. The central bank is expecting a GDP growth of 1.2%, 0.5% lower than forecasted in November 2018. The downward adjustment was due to weaker global economic growth and the Brexit uncertainty. The Bank of England will let the inflation rise above the objective rate of 2% in 2020 and 2022. The Bank of England is still indicating a gradual and limited interest rate hike. And that's it for this video. Check the video description for other useful information. Thank you for watching.